The stock market HQ. We're going to take a look at three stocks in 3 minutes. Actually, more likely four stocks in 3 minutes because Deere and Boeing are interrelated. Just a reminder, no forecast, no predictions, no advice. This is educational information only. So just have a quick look at the Boeing and Deere seasonal chart analysis there. Just take notes of the sell dates in the strategies. February 17th for Boeing, January 12th for Deere. First of all, we're going to want to take a look at Boeing. Over the last 4 months, so we've had a pattern where we've had consolidation followed by a breakout, consolidation followed by a breakout. Now we've got this period of consolidation here. Now within this consolidation period, we've got something interesting happen, which is going to be consistent through the next three stocks that we look at, which is called the volatility squeeze. And that's when these two green Bollinger Bands compress to within 5% of each other. They signify that there's going to be some kind of a significant move. The tighter those bands are, the more significant the move is actually going to be. You can look at the on-balance volume, and you can see over the last 4 months, the institutions have been accumulating shares, and then they stopped accumulating shares. In order for the stock price to go higher, we're going to have to see a breakout in this institutional accumulation. If there's a breakdown, then stock price is going to go down. When we take a look at the money flow index, money flow index is kind of in a downwards trend, but at a neutral level. So with this move in Boeing, it could go either way. The seasonal sell kind of time says that it should be coming up here within the next week or so. Stock price might turn down from this volatility squeeze. There's some kind of a big news, big order from a major airline. It'll probably see that stock price break out to new highs. The upwards price target would be somewhere around $230. The downside price target would actually be towards this $190 area here. That's because we've got a high level of break-even shareholders in the volume by price. We can see this level right here. So a lot of people that have been buying shares. And then the next level down, where there's a major layer of shareholders, are right in this kind of $180 to $190 zone. So anybody's price starts to drop, all these holders here are going to take a look and say, well, we're going to cut our losses, and they'll start selling until they get down to this level down here. Moving on to Deere. So we had a similar pattern, consolidation, breakout, consolidation, breakout. We had the same volume by price level here of institutional holders, except what we had from here was a actual price breakdown. So this is what we don't want to see Boeing do. And we had a similar pattern in the on-balance volume where institutions were accumulating shares and they stopped accumulating shares. And they haven't started selling yet, but they've just stopped accumulating. So again, the price could go either direction here, depending on what the big institutions do. We can see over the period of the last kind of 3 months, I guess, that the money flow index has had a very slow outflow of money there. And if we take a look at this drop right here, it just happens to correspond pretty close to around January 15th there, which is when the kind of major price drop and breakout of that channel level had. So that's why we want to be careful with Boeing. Just an example of using Deere to highlight that. Next, we're taking a look at Freeport-McMoRan, copper and gold. Again, the industrials materials followed similar patterns. Got period of consolidation, breakout, period of consolidation, breakout, period of consolidation. And as well, we can see we've got the two green Bollinger Bands compressing. So this is going to move either breakout or break down. When we look at the on-balance volume, again, we've got institutions accumulating. Just break below that trend line. Institutions stopped accumulating. Go look at our money flow index. It's down kind of at a lowish level. It's flatlined a little bit there. So this stock could move either direction, depending on the general market movement. Next, we want to take a look at, by contrast, a technology stock, and that's NVDA. So with NVIDIA, we can see it's The price has taken off right from $140 a share at the start of January to a high of $223 a share now. However, as that price has been climbing over the last kind of 2 weeks, the money flow index went from an overbought reading and it's now in a downtrend, even though price is going up. So that's a divergence. As well, we can see the money flow index, or sorry, the on-balance volume shows that institutional investors have been buying shares. If institutions start selling shares, we're going to see a break below that trend line, and that would signal that institutions are taking profits. As far as where the price could possibly go here, there's what's called the reversion to the mean, and that just means that the mean is the statistical average. And when we look at this blue line flowing along here, that is the 50-day moving average. So generally what happens is the price reverts to the mean, and we can see price came to the mean there, dropped below, went back to the mean, above, back to the mean again, and it's broken out. So the downside risk that we're looking at here is once again back towards the mean level, somewhere in that 160. But it's also very possible that the stock price could keep going up higher. But that's a general pattern that we would be expecting to follow. That's it. Thank you very much. Happy trading.